Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar extended its rebound last week, reclaiming the 60-day simple moving average as sentiment turned to an upbeat scenario. Given the fact that the RSI has strengthened and the MACD and the trend from the ADX, as well as the 60-day moving average cleared, now reinstates the topside target of 64 cents. Meanwhile, the US dollar index slipped to 99.5, a four-year low, as rising trade war fears after President Trump broad tariff measures ranging from 10% to 145% triggered a sharp response from China. Given the rebound, the Australian dollar remains in bullish territory after the strong engulfing candle, and along with that, with the 60-day simple moving average and the technicals, keeps the view to now 64 cents. Any pullback is likely to be short-lived. With all eyes on the ECB this week for an expected rate cut, the euro surges on Friday to the highs around 114.5, last seen back in February 2022. As I mentioned, the US dollar did drop to 99.5, given the President Trump's hikes on China to 125, which spurred a retaliatory response, further pressuring the US dollar. Last week, US inflation data also weighed on the dollar, with the March US CPI easing to 2.4%, better than expected of 2.6%, and the core CPI rising to 2.8%, while Friday's PPI also softened as well. The March FOC minutes showed caution amid tariff uncertainty despite strong growth and labour market conditions. So with the top side target reached at 112, now extends towards 115 to 115.5, as the dollar index may crush the level around 99 to 99.5 and open the way to 96 as a potential target. Any pullback likely to be short-lived. As we look upon dollar yen, we can see the market is somewhat negative after crushing the level around 144 and now looking towards the region of 140 as a potential target, given the ADX to a bear trend and the RSI still has room to move lower, should find this target reached and reassess. Sterling crushes through the trend line and now reinstates the topside target somewhere around the region of 133. Given the fact that the technicals have firmed up, although I did keep a neutral view for some time, still a little bit uncertain on how the market may play out, but given the fact that the technicals have firmed and the break of the trend does give some indication that the market is looking towards that 133 target. Wrapping up with commodities, the market reaches a fresh high as uncertainty still remains when it comes to global markets. Nevertheless, the strong rally, and along with the fact that we've cleared the second target, which was first at 3,100, now 3,200, looks towards 3,500 as an initial view. Wrapping up with oil, a little bit uncertain given the fact that the RSI still remains under the midway point. We do need to see a break of 62, 30, 55 to support the bullish scenario on towards the region of $66 a barrel. Failing to get that move through 62, 30, 45, then the risk could see a pullback towards the region of 57.70 and reassess. Well, that's a wrap. Thank you for joining me. As always, look out for the interest report. I hope you enjoy the great start to the new week.